Good day, all. Ira Epstein with your metals market wrap-up, and this is for Thursday, the 6th of February, 2020, and we're getting on into the 140 time frame. So if you look at the metals, you had a good bounce today. Platinum and palladium reversed to the downside. They were the two big losers of the day. Got the platinum here about $21 lower. Palladium was down at one point almost $100 an ounce, but it's such a number one, it's high-priced, a lot of volatility market. Stock market, the bull market continues on. We're sort of getting a pullback, though, in the Russell. It's sort of breaking away again from those other markets. The one thing that we continue to see is the dollar is ruling supreme. We're seeing that the bond and note markets are flat in the water. On the energy markets, pretty flat here, too. Now, going into the weekend, one of the things that should be on traders' mind is what do you do with announcements coming out of China? How do you play the coronavirus? That becomes the interesting part. At some point here, what happens is as China's situation works through Europe, other parts of Asia, economies, as their data comes in, and remember, this is all brand new. This only began in early January. We're 35 days from when this all began. It's not a very long time. But the economic data is going to start showing. Well, if banks react and they want to do something to stimulate economies, you could get a situation where gold benefits because other currencies start dropping and it's a storage of value. Just bringing the point up, no more than that. In the gold market, we've been in a bit of a corrective mode. We're down $18.50 for the week, and this is a chart of just closes. What I do as a chartist, I look at this red line. To me, it's a mental filter that I'm looking at. It's visual, of course, but it tells me when the market's over the market, it's in a bullish mode, an upside bias. When it's under it in here, a bearish mode. Back over it in a bullish mode. So even though you're in a corrective zone, you're overall still friendly, this market. Then I start looking at charts. Now, you know I labeled this crazy day Missile Day, and I pointed out to you this week that even though we had a nice rally, we never got through that day where the market was panicking as Iran was firing into Iraq the missiles at our U.S. forces. And you went up and then you came down, and frankly, you've been at a peak at that 1620 level, and that occurred in January, and you haven't come anywhere near getting back up to that peak. But what you have gone into is a total consolidation, and you can almost say that you made this peak, and within that week, another 4 business days, all of a sudden what you did is you made a break low, and you've stayed within that area this whole time. So as a chartist, it's a consolidation area. Are we trending? No. If you take a look at that chart without any lines on it, I put my swing line on it. A swing line is a backward-looking indicator. It's looking at the previous day and off a set of rules that I developed. It is looking to see, do you have a higher high, lower low, inside day, outside day up, outside day down, and it's going to draw the line the same way each time according to those rules. I then visually look and I say, well, do I have a trend? A downtrend would be lower highs, lower lows. Don't have that. I have a higher high and a lower low. I put these arrows on it so you could easily see it. And by the way, when you plot this indicator, if you have our charting software, you can even make each one of these plots give you the exact number. They'll all lay out on the chart if you want. It depends what you want it to do. So I don't see a trend. Next, I look to see where's the market in relation to the 18-day average of closes, which I term the line in the sand. If the market's under it, I have a downside bias, over it an upside bias. If you take my charting course, you learn that when the market gets away from this number, it's not uncommon that it comes back to challenge it and see what it's made about on corrections. And if you drop down, it starts challenging the upper part. From there, the market decides what next. And so I'm at that point, what next? Does the market want to get under 1551 and resume a downtrend with lower highs, lower lows? Possibility. It cannot, on this pattern, start an uptrend. Why? Even if it tomorrow shot up all the way through 1598, and then I'd end up, unless you had an outside day up, I'd end up with a lower low, higher high. Outside would be a reversal day, and I have a special set of circumstances on the swing line to adjust for that. the market's caught somewhat between the upper Bollinger Band and the lower band. 95% of the time, the market's going to trade within bands. Now, you'll say, how do I know it's coming out and going to stay out of the band? A tip-off, nothing's all the time, but a tip-off is the narrower the bands get, they'll churn sideways on you. From there, you get your breakouts one way or the other. And initially, when you're churning in a narrow band, the first breakout's going to be overbought or oversold, and it's full of churns. No question about it. It's rare that you get that perfect whirl. Oh, it's just not going, and all of a sudden it's gone. You get a lot of this. Recently, traders have probably lost their shirt. They're all mentally trading and not paying attention that when you hit a Bollinger Band, 95% of the time you're going to stay within the band, not out of it. So they get wiser, oh, they know how to play the coronavirus, and suddenly the market comes down. Now they're saying nothing has really changed. They're the ones on the defensive. The pros probably came out of the market. If you look at momentum, the momentum of the market when you got up there was overbought as can be. So the support is the 18-day average. You went through it. You entered into a territory where the market started coming down, and this was, by the way, yesterday, so I'm not giving you old history. If it gets under 30, it's oversold. It didn't. So you have a market that's come right back to neutral. That's where I'm at, neutral. I mean, it's interesting that you couldn't get to the lower Bollinger Band. Without question, I find that part interesting. It means the market probably has innately more bullishness than bearishness about it. But if you take out that low, the odds are you're going to that Bollinger Band. That's the number that has to be defended. What else is happening on the chart? There's a very subtle change apparently going on. You at one point had got up, and this is the gold-silver ratio, and think of it this way. How many ounces of silver in a perfect world, no commissions, no anything, do you need to get an ounce of gold? So you got your shopping cart, you plug it in, you go to a store, and perfect world, hey, I'll take all that. So near 90 ounces is suddenly 87. More important to me is, do you get under this 18-day average of closes? If it does, just like it did here, that's often a sign the market is what? Ready for silver to gain on gold. So, and if you get over it, I'm looking for it. It doesn't stay back over it, and it gives you another indication. Metal markets that are bullish often see those base metals go with them. It's not just a gold market. So another thing that, being in this game 50 years helps me with. Doesn't mean I'm right on that analysis, but it's what I'm saying. I'm seeing another thing in silver. Notice how the 100-day average has been supportive of this market more times than not. Yeah, you can slip slide through it, but if you get to that Bollinger Band, just what we talk about, you keep running back against it. What's the trend of the market? Tonight, the trend was nullified. I'm the first to tell you got your lower highs, but now do you see you got higher lows too? Suddenly the game changed on you. And where the opportunity to come out of shorts was, if one were short, and I don't know that anybody was playing it that way or not, was there. Now you're back to the 18-day average looking for direction. In the copper market, you lost the embedded reading. You know what I say? When you lose the embedded reading, the only time you can get it back is the next business day, which, because copper opens at night, you get a pretty good feel about it right on the opening. If it stays lost, it is not uncommon for price and the 18-day average to make a run at each other. Like the coffee market, my other video, this is such a big break. I mean, you're playing for the end of the world if you're looking for more to happen. It can happen with coronavirus, but you're playing for an event that's very difficult. And that coronavirus is not like a natural disaster where you're wiping out cities. It's very contained in China. China asked Chile to stop sending cargoes right now of copper to it. It's got to get the factories open and work with it. They'll take that copper. They're not going to break contracts with them. It's a supply issue in getting the demand for it going. So did the market get cheap enough is really the question. My work tonight would say, okay, maybe that moves over. I don't need the last few cents. That's the way I'd be looking at the market. In the platinum market, you made a run-up, failed against that 18-day average. That's the battleground, that line in the sand. What is the trend? There is none tonight. You made a higher high and a lower low out of a trend. If you take a look, this market has been oversold. I don't think the pros are selling the market on the rally, nor do I think because it's oversold they're buying it. I think they're on the sidelines here. In the palladium market, we talk about hitting the Bollinger Band. The first challenge of it is often, the word is often, a zone where the market has a problem, depending on the pattern. Look at this. This is that tight pattern. This is not a tight pattern. This is the tight pattern where maybe you get the breakout. Maybe. So the first challenge, the odds are you're going to have a resistance point. You get up there, and I know it looks the most bullish when you're like that. I'm the first to tell you that. But it's the resistance. You're in the old all-time high area. Momentum's up, trend up, but you've hit that number. I think the pros are stepping back. I didn't expect a $94 break today. Where did the market carry, though? Right to the 18-day average. Magically stopped there. I'm not the only person looking at numbers, be it 18, 19, 20-day moving averages. There's others looking. Now the question is, what does it want to do? The bias is up. Momentum turned down. You had a correction. Does it find its footing here? That's what the market's going to look to see. Dollar index continues on its way up, but. You're over the upper Bollinger Band. You're overbought. I don't care what it does from here. I think the pros are going to take some money off the table. And yes, the dollar's bullish. It's had a nice run, but it also had that run right here. Got to the Bollinger Band just like that, and all of a sudden you got a correction. I am not playing for those corrections as a trader. As a trader, I'm just recognizing, okay, peel some money back maybe, tight stops, see if the trend continues to hold. We did get the 18-day average right over here, and you can see this, to cross over the 100. So a new high was ideally, as a chartist, what you're looking for in those type of plays. It made it. Now the question is, can it stay with it or does it break off? Again, you're going to have to go through the weekend to find out. But that's what I created my charting course for. What you see me doing here, I can have you do yourself. It's not about me, it's about you. And what I did is I created 60 hours of videos. Now it's a lot of chapters, each one small. And I teach in a way, and I've been teaching, in case you're interested, I don't know, 45 years or so in doing what I'm doing, different manners of it. I can teach people to follow. In fact, on my charting course, I removed the names on the charts, a lot of them. I want you to look at a chart. And then all of a sudden I bring the names back for you and you go, oh, wow, look at that. Because if you see the name, you have a made-up idea what the market's going to do. In the course, it's swing lines, Bollinger Bands, window envelopes, how to use more moving averages than you're seeing. But it's pretty much what you're getting. There's 5 different indicators that I use. Each one filters each other. I teach you how to lose. I want you to listen to that word. You're going to have losing trades. It's money management. I teach you how to stay with the winner. If you can get to that winner point, why not? It's both sides. But if you think you're good enough, you're not going to have losers, don't look at investing in anything, okay? Every trader has losers that I've ever met. Doesn't mean that there's not somebody out there that walks on water. The key is the game plan, managing your risk, ways for you to predict your trend and where do you go with it. In the morning, in the course, I want you to be looking at my morning subscriber video. In the futures markets, that's going to show you just what I think coming up for the current day. So I put out those videos for a reason. I had somebody write me on YouTube, you know, he's looking at stuff that's already closed today. On these videos, I am. But I'm still telling you what I expect for tomorrow, an idea, giving you the what-if scenarios. I'm not telling you to buy or sell. In the morning, I'm telling you to buy or sell in my morning subscriber video. And for those of you in spiders and ETFs, I do that at about 4 in the afternoon because you don't open in those spiders and ETFs to 8:30 in the morning the next day. So I'm giving it to you right away. The reason I do the futures one first thing, most of you are not trading until when I record that video, it's posted before 7 in the morning Chicago time. That's before 8 New York time. It's still, what is that, going to be about 5 in the morning on the East Coast. And of course, Europe and the other places, depends if they're sleeping or not. So, how do you find out about it? Go to our website under the word education. It explains the whole thing. Buy it right there. You'll get the charting software package. We'll make sure that you get into the subscriber videos, the daily research that we have, the whole package. You'll find it very inexpensive. I'm Ira Epstein. You have a good day. I'll see you tomorrow.